Good morning. This is Ron Janish, and what we're looking at is an ES chart. It's an intraday ES chart. Notice that this is a 60-minute. We can knock this down to 30-minute, and we will. And right now, want to take a look at the concept. Here's a daily, so we can see the market's been going up for the last few days, and it's starting to say, oh, well, we'll see. So the market is in an uptrend, and going against an uptrend has its risks. So, what kind of things would a course member see when a market is in an uptrend? Well, let's take a look at what we saw today and yesterday. Well, first of all, this is the median line. And notice that as prices went up, they made it to the median line. They made it up, but didn't quite make it. And here the space was bigger. Now, let's take a look at this. Okay. So here you can see prices made it up to the median line. Okay, we see where that little circle is in the middle there? Okay, at the end of the line. Now notice that here it went up and didn't quite make it to the line. Let's see if we can always get a space. And here once again, at this high here in the middle of the page, or let's say right here, okay, notice the space gets bigger, and the space gets bigger, and the space gets bigger, and bigger, and here it's about the same. Okay, so you have this divergence from the line, and selling each time because it made this little divergence can be risky at best. So what you use is textbook course technology. And one of the things that occurred along the way here is you have the easy pattern. Okay, and as you look at the market here, you'll see as the market is going up here, you see you have an easy pattern at this point here, but you don't have it hitting a sell point until it reaches over here. Now this was 2 o'clock in the afternoon yesterday, and personally I was in no mood to do anything because overnight who knows what can happen, and we're in an uptrend, and if I'm going to go against this, I want something really solid and really easy. So the easy pattern is by itself an incredibly strong sell signal, and you have a double easy pattern over here as prices get to here, and you'll need to draw your lines in order to determine that. Okay, I won't draw this out, and that's a little too easy. You know how to do this. This is not rocket science. It's relatively easy. And so you have your easy pattern here, and I'll show you what I did. What happened was the market went up here, as we can see, and still having that space, okay, that Andrews divergence, and starts going down and going down and going down. And this morning it went up nicely up to here, and this was at when was this? This was about a half hour after market open. Okay, so one of the really neat things about this particular point here, and we can take this line here, let's clone it, and if you look in the second to last chapter of your manual, you'll find that that's what applies right up here. Okay, and so prices go up here, they try to make new highs, and they reverse, and here you have your easy 2 pattern. Okay, and your easy 2, or actually I should say easy power 2, because this is typically the start of a third wave that really goes down nicely. So I have a double easy top over here, and I have an easy power 2 signal over here, and it's the start of the day. Now there is something else that you probably want to know, and that is that this is something that someone mentioned to me the other day, and I too have observed it, even though I haven't mentioned it to people a lot, is that during the morning the market for some reason makes very clear signals. So with Andrews, you'll have incredibly clear signals in the morning, and then during the rest of the day, or most of the day, there may not be that much in the way of clear signals. So unless you come to an important top or bottom. So I would suggest to you that the takeaway from this video is watch the market in the morning, in the first half hour or hour, as that's when you get your clearest Andrews signals. Okay, and as you can see, this is all textbook stuff here. Here you have your signal as second chapter of the manual, and here you have a double easy at the top, right? So this gives you a high probability of the market turning down for a while from here. And then this over here tells you that the market is very likely to go down and not exceed this high for some time. What does some time mean? It may mean a day, 2, 3. This is an uptrend. So anyway, that's what we're looking at, and that's to give you some quick insight on how the Andrews techniques are applied on the S&P intraday. All right, so draw your lines. Have a good day. Bye.